Lyft shares going into this, Tim, had been down 15% since the IPO. You knew about the lockup expiring earlier.
Yes.
Why are they doing this?
There is, and this was in the S1 filing originally, but there's a restricted stock unit plan that is causing this lockup to be moved up from September 24th to August 19th. So it is coming off August 19th, and we're not selling. We're in it for the long haul.
Why?
I still, believe strongly in the management team. The founders are doing a great job running the day-to-day, business at Lyft. Obviously, the numbers were phenomenal this quarter. 867 million top line. The projections were, 810 million. So I think Lyft's doing a great job of not only managing expectations, but beating expectations, which is obviously great for Wall Street.
They did lose their COO leaving the company. They're not going to replace that person. They're going to fill the job in other ways. I mean, from a management perspective, since you mentioned management, is that a concern?
No, I think John Zimmer has kind of been the COO de facto since the beginning.
And president and co-founder.
Right, and having somebody come in and try to duplicate his effort didn't really make sense. It's kind of the same thing that's going on at Uber as well. They just lost their COO because Dara, I think, is also trying to play more of a hands-on role. So that's what you're seeing at both companies.
Does the lockup ending concern you and all those shares potentially hitting the market even as the share price is down? I
think that's just the way things are these days. With unicorns going public and that many shares hitting the market at lockup expiration, we've seen over and over with every company that we've invested in. The stock takes a pretty significant hit when those shares hit the market. People are, hungry for liquidity, and when they have the opportunity, they take it.
So let's talk about the future. I mean, the story of if Lyft versus Uber has been price wars almost as long as they have both been in existence and getting the lowest price, but that means lower revenue, less incentive for drivers as well. Is there an end to that anytime soon?
I think we're still in early days. I think we've got a long way to go, but I think we're going to see less drivers and those drivers making more money in the future.
Why less drivers?
Because I think the business model is geared toward full-time drivers, and you're going to see less of those, I think, in the future.
So if less drivers make more money, do the companies themselves still
because
make more money?
Their take rates go up, and the companies make more money as well.
So what does that mean for the competition between Lyft and Uber longer term? Is it more about the brand and which company has the better brand?
I've always thought that there was room for a Coke and a Pepsi, in the ride-hailing space. It's incredibly disruptive. It's a huge market, and it's, again, in early days. There's still a lot of growth to come. There's room for both Lyft and Uber.
But when do they get to, or do they ever get to profitability? I mean, the two companies combined lost $2 billion in the last couple of quarters.
Yeah, no, the path to profitability conversation is one that is, I think, top of mind for Brian Roberts, the CFO at Lyft, and probably, that's the most important thing for him on a daily basis. But I think autonomous vehicles, I think electric vehicles, I think there's lots of different ways to achieve that path to profitability.
Autonomous vehicles are so far out.
I believe that's correct, yeah. I think they're a lot further out than most people think.
So then is the path to profitability a lot further out than?
I think there's a bridge with electric vehicles. I think that Lyft can take advantage of things like charging stations, the city bikes in New York City and other infrastructure that exists today to provide vehicles to drivers that require a lot less maintenance, that are much lower cost, that incrementally add to the bottom line for everybody, for drivers and for the company.